In 2021, Elon Musk was named the richest man on Earth, with a net worth exceeding $300 billion. That same year, he sold approximately $16 billion worth of Tesla stock and paid roughly $11 billion in federal income tax. Headlines called it the largest individual tax bill in American history. But here is what those headlines left out. In the years before that sale, when his wealth grew by hundreds of billions of dollars, his tax bill was close to nothing. Because under the American tax code, wealth is not income, and until you sell, you own nothing. Musk's fortune sits almost entirely in stock, Tesla, SpaceX, and other private ventures. Those assets appreciate every day. On paper, he becomes richer by millions of dollars every single hour. But the IRS does not see any of that growth as taxable income. It is an unrealized gain, and unrealized gains are completely untaxed. A man can add $100 billion to his net worth in a single year, and if he never sells a single share, his federal income tax obligation is legally zero. The 2021 tax bill only happened because Musk exercised stock options, a contractual right to buy shares at a previously agreed price that were about to expire. He had no choice but to sell. It was not generosity, it was a deadline. And even then, the rate he paid on those gains was lower than the ordinary income rate that applies to a teacher, a firefighter, or a software engineer receiving a salary. Long-term capital gains are taxed at a maximum of 20%. Ordinary income at the top bracket is taxed at 37%. The tax code treats money made from owning things more favorably than money made from doing things. That is not an accident. It is policy. In the years where Musk did not exercise options, he borrowed. Banks and private lenders will extend billions of dollars in loans to someone holding hundreds of billions in stock. Those loans are not income. They are never taxed. The interest payments are often deductible, and the underlying stock continues to grow untouched, waiting to be passed to heirs under the stepped-up basis rule, the same mechanism that erases a lifetime of untaxed gains at the moment of inheritance. The system is not broken, it is functioning exactly as the people who designed it intended. What makes this story significant is not Elon Musk specifically, it is what he represents. There were thousands of executives, founders, and investors across America operating under the exact same rules, using the exact same strategies, and paying effective tax rates that most working Americans would find difficult to believe. ProPublica obtained years of IRS data showing that the 25 wealthiest Americans paid an effective federal tax rate of just 3.4% on their combined wealth growth of $400 billion over a 5-year period. Not 37%, not 20%, 3.4%. The next time you look at your pay stub and see what was taken before you ever touched it, remember that the rules governing your taxes and the rules governing theirs were written by the same government, just not for the same people.